Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is Friday, June 20th, 2008. The euro-dollar pair rallied about 150 pips from its levels late yesterday, setting a high at 1.5650. There are continuing signs of trouble in financial markets, with earnings by banks likely to decrease as a result of more losses associated with consumer and commercial loans gone bad. The implication is that the Fed will not raise rates next week or in August, an outcome traders had thought was possible last week. The euro was also boosted by higher than expected producer price data from Germany. Surging oil prices caused the PPI to climb 1% on the month and 6% on an annual basis. The annual pace was the fastest since July 2006. The dollar-yen pair was weaker as well, falling from about 70 pips from its level to start the session. U.S. equities were weak today, with financial companies leading the way down. Also, oil prices climbed again, reaching above $135 a barrel, pressuring stocks. This week has put an end to the dollar rally from last week, which had brought the pair up from the 104.40 level to as high as 108.60. This is a trend seen in several currency pairs with the dollar, as speculation of a possible interest rate hike by the Fed dissipated this week. In Switzerland, producer and import prices were up 1.2%, jumping from last month's level of 0.7%. Prices were pushed up by high energy and food costs, the same pattern seen in all industrialized nations. The dollar-franc pair, which rose yesterday as a result of a dovish statement from the Swiss National Bank, gave back those gains in today's session. The bank argues that slowing growth will cool inflation. This week's data showed retail sales, industrial production, and investor confidence from the Swiss economy all falling, meaning growth is slowing, but inflation, as today's data revealed, is still climbing. In Canada, retail sales rose 0.6% for the month, with core sales rising 1.1%, better than expected. The strong report was led by increases in spending on gasoline due to higher prices, and clothing, furniture, and electronics. After the retail sales report, the US dollar-Canadian dollar pair fell to a new low, testing 1.01, but recovered after that and was up for the day. For the week, however, the pair took a decisive step in favor of the loonie after a month-long run by the greenback, which ended last Friday. Next week starts the housing price data from the UK and preliminary figures on manufacturing and services activity from the Eurozone and Germany. In another release, Germany will post its IFO Business Climate Index. All eyes will be on the Federal Open Market Committee decision on interest rates on Wednesday. Expectations now are for the Fed to hold rates at 2%, but the accompanying statement will be important to gauge policy going forward. That wraps it up for the weekend Forex news. Join us here Monday at cmsfx.com.